We can start in we can another 2 minutes 4:29 हुआ. So Uddhav is going to address today at 8 p.m.
I think we'll wait for a couple of minutes. I think people have started joining in. So another couple of minutes we start. Please bear with us, friends. We will start in the next minute or so. Narendra, can we start?
Sure. Good evening and welcome to the third edition of Knowledge Sharing Program arranged by Greenback Advisory Services. Today we are going to touch upon trade finance for import and exports, particularly in COVID-19 lockdown scenario. Friends, every economic crisis not only creates problems but creates opportunities. As a country, we are discussing about possible big opportunity by way of shifting of manufacturing activity from China to India. Similarly, markets have created few opportunities in form of interest rates and deferments. To talk on the subject, today we have a tall personality, not just because he is 6 feet 3 inches in height, but due to his academics and expertise. Manish Thanawala, All India rank holder chartered accountant and MBA from Pace University in USA, is a co-founder and director of Greenback. He has been consulting in forest risk management and international finance for almost 3 decades. So let's go directly to Manish.
Thanks, Narendra, for your kind words and welcome everybody to this third edition of the webinar series of Greenback. I hope you enjoyed the first two and I hope to make this as informative as possible. So the format continues to be the same. We will give you a monologue or a talk for the first 20-25 minutes. And after that, we will have an interactive Q&A session. I would request all of you to maximize the Q&A session by asking all the possible questions. And all our panelists are here and they should be able to answer most of your kinds of questions. So let's go back straight into the topic. So we have now been into more than a month into this lockdown. In fact, by May 15th, we will practically be completing 2 months of lockdown. Some parts of India, which are designated as green zones, have uh, resumed production from Monday. So we have some economic activity going on now, and hopefully, when we come to 17, a few more zones should be green zones, and we should have economic activity starting there. That is the positive news. On the other hand, unfortunately, Mumbai and Pune have seen large number of cases, and they have been in lockdown. And we are having our chief minister. I'm based out of Mumbai, so we are having chief minister of Maharashtra, Uddhav Thackeray, addressing the press today or addressing the media today at 8 p.m. And we would like to be keenly hearing from him of what his further plan of action is in terms of how we are going to exit this lockdown and go back to work as usual. But this lockdown has also given us opportunities. It has given us opportunities to connect with each others through a different platform. Rather than me coming to your office or you visiting my office, we are now doing webinars, we are doing a lot of conference calls. And we strongly advocate clients to keep connecting with us. We would love to talk to you and help you solve your problems. So let us take advantage of this opportunity or the unique opportunity provided by COVID and stay connected so that we can keep doing things ahead. Uh, the So, hitting the subject, I think the bigger problems that people today are facing is as simple as exporters are having delays in payments, there are order cancellations, contracts are getting cancelled, PCFC settlements are getting deferred, and buyers are defaulting, credit risk is increasing. On the other hand, for importers, they have huge import liabilities, but collections are not coming in. You have liquidity problems and other problems by which they are facing a lot of difficulty. What basically we are seeing when we see all of our clients in totality is exporters having delays in payments, and they are not being able to quickly get their money realized from customers. On the other hand, importers, whether they are exports or are selling in the domestic market, are facing cash flow crunches by which they were in a situation where they want elongated credits or they are looking at financing. Obviously, the Reserve Bank of India has stepped in, and they have created a situation where they have extended, asked banks to support clients by extending the total cycle, and as a result of which there are other options which are available to clients now to raise overseas financing. Plus, we are also into a situation where liquidity offshore has also got a little tighter. So LIBOR rates, which had gone significantly lower, and especially after Fed cutting interest rates to near zero, we saw LIBOR rates actually go up. Fortunately, the liquidity situation is gradually easing, and we have seen the LIBOR rates come slightly lower. However, we continue to see pressure, and we are in a situation where liquidity still continues to be a challenge. In addition to that, what has also happened is the banks overseas have cut lines on India. And because the lines on India have been cut, we have a situation that uh, the pricing for India risk has gone higher. And gradually this is tapering off. But we are definitely seeing a spike in rupee pricing for India risk. So this is what is the current situation and the current dilemma that people are facing. Uh, and the whole idea now is to try and see how we can address this situation and how we can get into a situation where, we minimize problems for everybody and how to find solutions in funding in difficult situations like this. So, what Greenback has been trying to do in this situation is create or design solutions for clients, the solutions to manage liquidity. And obviously, the normal funding structures are not working well. So we have to look at alternatives. And we at Greenback have been continuously trying to design some new products, some new ideas by which you can raise financing and move ahead. So I will present for, as we go ahead, some of the ideas that we have been suggesting to clients, both importers and exporters, and I hope that will help everybody resolve the liquidity crisis. So on the specifics, we look at short-term solutions. The first solution is for imports, we do UPAS transactions. That is basically discounting letters of credit. Obviously, this has been an age-old route and this has been very actively done. And now with banks providing extended working capital facilities, it's possible to do UPAS for longer tenors. With the LIBOR going down and the forwards being around 4%, a fully hedged rupee cost of funds would still work out in the region of 6%, which is very attractive for customers. And especially where you have a situation where you probably have unhedged your dollar rupee risk and you have a feeling that this situation of COVID, as things improve, rupee could appreciate. In such a situation, by extending or going for UPAS transactions will enable you to capture some part of currency gains also and benefit from some currency movement. So that is one part of funding called UPAS. We also have another situation or another structure which we call reimbursement financing, which is very similar to UPAS, but here instead of negotiating documents with a specific bank which is stated in the LC, the negotiation happens with a third bank, which or the documents are negotiated by the beneficiary's bank and the beneficiary bank claims reimbursement from the financing bank. This structure is of great help to importers, especially where the beneficiary is finicky and is insisting on negotiating with his bank only. And the reason why this happens in this current situation is that the DHL services also into India have been delayed, and there are times where DHL and other courier services are not giving documents into India, and hence the beneficiary may not be willing to send documents to any person outside India, and that is why we could we would have a situation that uh, uh, you know we will have to go into reimbursement structures where the beneficiary negotiates with his bank and he claims reimbursement from a third bank. If you have any questions on the reimbursement structure, and this is like a buyer's credit built into the LC, we will take it as we keep going forward. The next structure which has got very popular today is extension of LCs. So what has happened is, say pre-COVID, you have got into a situation where you have done a supplier's credit and or you have done a reimbursement financing and your LC was for say 90 days. Now with COVID, you have a cash flow situation and your working cycle, capital cycle gets extended by a further 90 days. In such a scenario, you can go in for an extension of LC, in which case you just need to have your bank send a message to the reimbursing bank or the financing bank which earlier financed the LC, requesting them for extensions of LC. This is a very simple structure. We have been actively using this to help a lot of our clients, and it is very easy to execute. So this has got very popular, especially for LCs which were opened in the pre-COVID era and which are falling due now. This is one structure where I would definitely suggest everybody examining for extending their payments. The fourth structure is SBLC backed bias credit. We are now all living in a post Nirav Modi era, and pre Nirav Modi we had the LOU route by which we used to raise bias credit. Post Nirav Modi, we are all in a situation where we use SBLCs to replace the LOU. So the LOU has got replaced by SBLCs. However, the documentation is far more onerous for a SBLC backed bias credit. Some banks require you to execute the documents, and some banks require detailed KYC, which makes this product a little less attractive. In addition to that, for any transaction to be executed today, the bank must have the product defined in the core banking system. There are times we have seen that this is not possible, and as a result of which SBLC backed bias credit becomes a difficult product to execute. However, given the fact that people have started getting used to it and more banks have started including this product as a part of their portfolio, we have already executed successfully significant amount of SBLC backed bias credit, and we would also be in a position to help you execute these transactions. My only request to you is please come to us well in advance. So if it is not something where, we used to do it in the pre-Nirav Modi era, where you came to me a day in advance before the due date. I gave you a quote and you sent the LOE out the next day for financing. This transaction, because of the documentation, could require at least 5 to 7 working days. So, please come to us in advance. That will definitely help us successfully execute the transaction. And in the meanwhile, I will also strongly suggest that you check with your bank whether they have an approved product called SBLC backed bias credit to make this feasible. So these are the structures or some of the structures that are related to exports or imports. I would now move to exports. One of the most common products that we do is LC discounting. And what we have seen now is in the post-COVID era, the banks lying on a lot of overseas counterparty banks or your banks of other countries from where you tend to receive export LCs have got chopped off. And there could be a very high possibility that your bank probably may not have limits on the LC opening bank. In that case, the bank will of course discount the LC, but he will earmark your limit, and which means that you are doing financing against your limit and not utilizing the discounting facility or freeing up your limit. So this could be a choke for you. So what we could probably help you do is we could find out a bank who would have lines on the LC opening bank and who would be able to discount the LC so that you get paid immediately post acceptance from the supplier. That is generally the way it happens. And your limits continue to get open for post shipment discounting. So LC discounting is a very good product, especially in this situation where collaterals are limited, your limits are getting squeezed, and you want to free up limit to ensure that you have enough limits for rotation. The other thing is factoring. So as we are in this post-COVID era and the risks are also significantly increasing, we are into a situation where your buyer risk has gone up significantly. One way to manage this risk is to buy credit insurance. And once you buy credit insurance, it is possible for you to get your uh, clean documents discounted, most importantly, without recourse to you by using the factoring route. So what happens in this is we set up a limit for each buyer depending upon the appetite of the financer, and based upon the limit setup, we do factoring. So this is how factoring works. We can do a full detailed one-to-one if you have any specific thing, and happy to answer questions on factoring in the Q&A section. So that is what happens when it comes to factoring. The next is we go into local currency discounting, that is INR. So if you are into local trade, obviously LCBD transactions continue to happen, and that is one of the most popular route of financing today. In addition to that, we have been able to do receivable financing, where you have been selling to good suppliers, and if you want receivables from that suppliers funded, without putting up collateral or without hitting your limit, we can do receivable financing. Unlike the export factoring, which is without recourse, unfortunately, this product without recourse part is not allowed in India, and hence receivable financing can be done, but it will always be with recourse to you. But at least on a different note, it gives you liquidity, and giving you liquidity in this difficult situation is the prime objective. The objective therefore is to keep rotating your cash flows and use all possible means to improve cash flows. The next is I would dwell into the long term solutions. uh, so this probably is times where people are in a state of gloom, but it is only in a state of gloom that people we believe that people should look at expansions, or as soon as positivity comes, look at going ahead, and that is where we feel financing will be of great use. We can always look at ECA back financing, where you can do if you are doing imports, and like India has Exim Bank of India that promotes exports. Every country has an Exim Bank which promotes exports from that country. For example, if you are doing funding or if you are doing it out of Germany, you have Hermes, which probably gives financing. You have Sace in Italy. You have COFAS in France. So there are several export credit agencies there. And if you are importing sizable amount of equipment from any of those countries, we can tie up a foreign currency loan denominated in a currency, which can probably help you get cheap funding. The beauty of ECA financing is the collateral requirements are limited, and you are basically only mortgaging or giving away as security the assets that you've actually purchased. And it allows you to get long-term financing. It also allows you to get very competitive rates of interest because it is backed by credit insurance. However, one caveat with export credit agency or ECA financing is you need to be of acceptable rating for the export agency. We are more than happy to check for you whether you would be in a position to fit into that criteria and see how best you can avail of this facility. The next thing is ECBs. This is the traditional form of financing. We have done a lot of ECB transactions. The good part of ECB is you can use it for local capex also. While sorry, the big problem with ECB is you cannot use it for local capex. You are stuck to do it only for the imported equipment. The third thing is what we do is long-term solutions for import financing, where what we have seen is generally clients do not import one machinery from one country, but they do multiple imports from multiple countries. In this case, we can bring everything together under one platform, and we can bring in an ECA which will be the most competitive and structure a financing where you can not only finance for multiple countries through one solution, and also probably try and fund a part of your local import equipment. So this is a very structured solution where we get in our partners from overseas to package all the purchases together, bundle them together, and project it as one single purchase to an ECA agency and maximize the funding. The requirement here is we expect that you are buying multiple equipments from multiple countries and the overall size is significant. So ECA financing works well when you have one supplier and you're buying significant machinery for them. The bundling solution works where you are buying for multiple suppliers, maybe from the same country or from multiple countries, which will enable us to package the product. So that comes with the long-term solutions. Well, friends, I think I have taken enough of your time, and I think we have put up our thought process on what we can do on trade financing. Uh, I think the most important part today is being interactive, and the beauty of using Zoom is it allows you to be completely interactive. So I would throw it open to everybody to ask questions, and we will try our best. Our panelists will try our best to answer those questions. So can we take your questions and take it forward from here, please?
So Manish, can I read the question out for you?
Sure, thank you.
Okay, there's one question from Anna. In case of factoring, since it is without recourse, can debtors be taken out of balance sheet?
The objective of factoring is to make it without recourse, and once it is without recourse, you of course can take out the debtors from the balance sheet. That is the basic advantage of doing factoring, and it is clearly done with the objective of taking debtors out of the balance sheet.
Okay. I have second question from Mr. Hitarth Jain. Can we take an ECB for land purchase?
Well, I don't think the ECB guidelines allow you to take ECB for land purchase. The ECB guidelines are extremely clear on the end-use purposes. So it has to be incremental capex, and land purchase has been excluded as one of those things. So I think ECB cannot be used for land purchases. I hope that answers the question.
Yeah, there's one more question from Mr. Hitar Jain. What's the difference between LC discounting and factoring? I think he's talking from an export perspective.
Correct. So the difference between LC discounting and factoring is very simply put. In LC discounting, the underlying is a letter of credit or an LC. In case of factoring, there is no LC. So we are basically working on the credit risk of your buyer. So typically you factor or you sell the receivables of your buyer, and you get payments against that. In case of factoring, you don't require an LC. The basic concept is you do it on a non-LC transaction.
Any other questions to be asked now? Manish, I would like to add our friend Mr. Arjuna. Maybe we could ask him what is the scene in Germany because he's been there, and of course I'll ask our friend Pankaj. Can you add Mr. Arjuna to the panel?
So the next question somebody has asked is, what is cost effective factoring or discounting? Obviously, discounting under an LC is a bank risk that generally will be more, with generally, again, quote unquote, generally should be cheaper than factoring, because factoring also involves insurance costs, but it also depends upon your buyer. So if you have a AAA buyer like an Apple or a Google, where, honestly, I've done factoring for Apple and Google also. So there the pricing is extremely fine, probably more competitive than LC discounting. So the price of factoring is very clearly dependent upon your quality of your receivable or quality of your buyer. If you have a very high credit rated buyer, then it is possible for you to do LC factoring and discounting.
One more question is from an attendee is, do you provide credit financing on exports? That's whether Greenback does the financing.
Uh, well, Greenback does not do financing. Greenback syndicates financing. So the way I look at it is, in this case, we would be able to syndicate some limits against exports. Narendra is an expert on local financing. Uh, Narendra, could you also add something to that to give a feel of things today? Narendra, can you unmute and add?
Yes. So currently, the banks have been, means by policy, they have been a little liberal than earlier. Like PSU banks have given additional COVID limits up to 10% of the existing limits for all the standard accounts. Moratorium, yes, everybody is knowing, and many of you must have aware. Right now, the guidelines or from whatever has been RBI's directives is to help the corporates in enhancements or fresh limits, etc. However, banks are going still slow on greenfield and fresh capex. So on working capital, there is definitely a good support. Capex will take little more time. Banks are little concerned where trade is with China, but well, that is for the time being. I think as we open up the economy, that will go away because the dependence is going to continue.
Great.
Okay. Is in case so, I think that Mr. Uday, you have just gave a question which seems to be incomplete. In case of an optional contact booking, what's that? And I'll ask him to wait the question separately. What's the difference between the reimbursement and extension of LCs?
Rekha, can you please take over and answer this?
Rekha?
Unmute, please.
I think Rekha is to unmute.
Hello.
Yeah, Rekha, can you answer this? What's the difference between the reimbursement and extension of LCs?
Sure. So basically, in case of extension of LCs, they are the original LCs which have been issued, and on due date, the importer is looking at extending it or making the payment after an extended period. So in this case, we go to the particular bank which has already negotiated the LC. We go to the same bank, request them for an extension. So this is basically extending the LC, extending the due date of the LC. Whereas a reimbursement, in a reimbursement, an LC is, the documents are negotiated with a particular bank. It could be the supplier's bank, and there is a new bank, a new funding bank, which reimburses the supplier on a particular request in a particular format after acceptance from the LC issuing bank. So I hope I'm clear.
Okay. There's a question by Mr. Vipul Jain. His question is, we are in the process of finalizing an ECB deal with a German bank, but besides the lien on the equipment to be financed, they are insisting on a pari passu charge on the existing assets also. Is this justified?
So I will answer that, and we also have on our panel Arjuna Menon. Welcome, Arjuna. He's an expert on this, so I will also request him to add his comments after that. My view on this is that generally the bank will not ask for a pari passu charge on existing assets, but in light of COVID, things have changed, and we have Arjuna also joined us from Germany. Probably he will throw us more light on what the situation now is in Germany, especially in the ECA side of transaction.
I'll briefly introduce Arjuna. Arjuna is the person working for this company called Ferrostal, who are syndicating and structuring an ECA-backed funding for export from Europe. So he's a veteran banker with almost 20 years in the banking, and he has a very strong background on the ECA financing. So he understands the entire mechanism, the process for the ECA, getting a ECA insurance, and also getting bankers who can finance. So we have an arrangement with him, and Vanish was talking about the long-term financing through an ECA and also the equipment financing. So Arjuna is an expert in that, and we will be having an exclusive webinar very soon where we will touch upon this ECA back funding, how it works, what are the advantages in terms of, especially in current scenario, in terms of cost, tenor, and everything. So anyway, Arjuna can address this question. I'll put it, I'll read the question again, Arjuna. Arjuna, you have to unmute. Yeah.
Yes.
This is
Hi.
a question by Mr. Vipul Jain. He says, we are in the process of finalizing an ECB deal with a German bank. Besides the lien on the equipment to be financed, they are insisting on a pari passu charge on the existing assets also. Is this justified?
Okay. Hello. Good evening. Good afternoon, everybody from Frankfurt in Germany. He's mentioning ECB deal. That does he mean ECB or ECA deal?
This is an ECB.
Okay, so external commercial borrowing. So I'm not an expert on that. I'm an expert on ECA. Sorry about that.
Sorry. So I
But
would assume that it's a German bank. It should be an ECA rather than an ECB.
Yeah. Okay. So from my experience, the modus operandi is usually the negative pledge. Sometimes, depending on the counterparty risk, I mean the risk of the borrower of the loan, the ECA will insist on future collaterals. So it is possible, albeit not very common.
Okay. Thanks, Arjuna.
Okay. There's a question on please explain reimbursement structure. I think we can have this as off the session question. Maybe Rekha can address this with a flow chart and the other thing. So this is a question sent by, I don't see the name. So this will be addressed separately. You can send a mail on the email address given, and we will address it with the process cost and everything.
Or you can also reach us on the numbers given below, which will enable us to help you answer those questions.
So before we go to the next question, I'll just see. Yes, Uday, you're asking about forex angle. I'll address this separately. We are only talking on financing. Okay, there's one question from an identity. I am not able to close my export orders only because my customer want a longer credit period. Any solutions for that?
Well, my suggestion to you is please share with us your names of the customers. We'll try and see if we can help you with factoring. Typically, factoring works for a tenor of 180 days. If the tenor is beyond 180 days, then it may not be possible for us to do factoring. But if it is within 180 days, we should be able to do factoring for you. So my suggestion is please share us the details, and we'll be more than happy to look at it and see if we can structure a solution for you on this lines.
There's one more question from, I think, the same person. Would you recommend LC or factoring in case of export from a cost perspective?
Logically, LC will be cheaper than factoring. So I would clearly say that in 99% of the cases, the LC will be cheaper than factoring, and hence I would suggest that if you are getting an LC, take the LC first. It is probably a safer thing than to go in for factoring.
Okay. I don't see any more questions. Okay, now just off track, since we are all discussing about COVID and, we have been getting news about India, we can understand from Arjuna, what is the situation in Europe in general and Germany in specific as far as the COVID situation, the actions taken, and are they at the peak, or whether the country started opening up? So I think he will be able to throw a light on what's happening in that part of the world.
Super, thank you, and thank you for the introduction. Despite the fact that I'm not a veteran banker of 20 years, it's just about 10 years, but I wasn't able to stay in there as long. So thanks for the introduction. Yes, as just a few sentences about myself. Manish mentioned the long-term solution for the packaging partner. That would be the company that I'm representing, Ferrostyle Equipment Solutions. And Greenback is our agent in India, and we're looking at a few transactions at the moment. So Europe is, all countries in Europe are in different stages of lockdown. I think the peak is starting to go down, especially in Germany. The problem now is more or less complacency in the population. And usually we Germans love following the rules, but even now it reached a point where people are getting upset about it. Normal life is starting to come back. We're starting next week. So schools will start opening again. Universities will start opening again. Most offices will start working again, but a very, very slow pace. I think overall, from a business perspective, as a country that is so heavily dependent on exports, Corona is a terrible situation. I think in the news today in Germany was that German exports took the biggest plunge since 1990, so since reunification. So our industry is in trouble, which nevertheless gives us a good chance of promoting more ECA financing, because the German government is really keen on helping German companies like ours to export the machinery and equipment, which for you on the hand, on the buyer side of the equipment, gives a good chance of obtaining ECA financing. So they did a few of the regulations were changed. The ECAs now have the mandate of speeding up the process, getting approval much faster. ECAs are really open in providing coverage for transactions, and something very important in case of the German ECA, they decided that their risk analysis will be based on the financials until December 2020. So they will not take into account 2019. So they will not take into account first and second quarter of 2019 for obvious reasons. I think that's also quite interesting for you. Nevertheless, what we see is a rising liquidity cost, especially in dollar. So euro financing is getting even more interesting than it was before. I think that's everything for the time being. I think Zubo already mentioned it. We're planning a separate ECA session with me quite soon, either next week or week after, where I'll be able to tell you more details about this, the possibilities of this form of financing. Thanks very much.
Thank you, Arjuna. It was really nice of you to join us all the way from Frankfurt, and we look forward for the session, and we'll keep you posted once we get a good number of response, and we'll be really happy to have you address this topic. We don't seem to have any more questions. Let me see if there's any other question. Yes, Ashit Parikh. We are into EPC business where we import equipment from multiple countries. Does the option of funding equipment import available for us, or is it only for actual users?
So the question is whether you are entitled to raise ECB or not. So the mute question is whether the import of capital equipment or for equipment for you is raw material or capex. If it is raw material, then you are within the RBI guidelines. You cannot do raise financing for more than 1 year. Trade credits are capped at 1 year. But for you, if it is capex, then obviously you can do it for this option is available to you. So we have been working with a lot of people who rent out cranes and other equipment. And if they are the owners and they are renting out, obviously they can raise overseas financing against that. And if you are an EPC contractor and you're using the equipment for executing the contract, it is owned by you. Obviously, I would say that you will be in a position to raise an ECA financing against it.
Manish, can I say something about that as well?
Sure.
That's an excellent question. Really good thinking, because it's something that we at Ferrosal have started to evaluate last year. We're now working in a few transactions actually at the moment where we act as a sub-supplier under an EPC contractor. So if you, let's say the EPC contractor needs CapEx for the projects, but for example, is an Indian EPC contractor, but buys machinery equipment from Europe, the EPC contractor itself is not eligible to apply for ECA financing because, for example, if you want to apply for German coverage, you have to be incorporated in Germany. Nevertheless, a solution is us acting as a sub-supplier under the EPC, packaging all the CapEx, and then apply for ECA coverage on behalf of the Indian EPC contractor. So despite being incorporated in India, the EPC contractor can then bring ECA financings to the table by acting through us.
Hope that answers the question.
Yeah. The question from Mr. Abraham Chandy. His question is, one second, yeah. How can we make arrangement to clear LC invoice now that buyer's credit is not available and SBLC is not being given by the bank?
Subbu, can you please repeat the question?
Yeah. How can we make arrangements to clear LC invoice now that the buyer's credit is not available? I think he's talking of the LOU route, and that SBLC is not being given by the bank.
So I think your only other option is extensions. So you can look at extensions, or you will have to look at some enhanced rupee facilities, which RBI has allowed banks to sanction. So given this situation, we have only two routes available. You can do extensions, or you can probably go to the bank for a rupee facility.
Mr. Chandy, you have one more question asking that where can you arrange for finance for raw material can be arranged? You are trying to say for this for imports? I think we need to...
My suggestion is, Mr. Chandy, I would strongly request to connect with us offline, and we will try and have a call with you and sort out your issues.
So I think we are at the end of the questions. We request now all the participants, if they have any more questions, they can send a mail to us or a call Rekha or Varsha on the numbers given, and we'll be more than happy to help you out in whatever problems you have within the guidelines permitted, and see if we can help you to get a liquidity either on your imports or on exports. Okay, there's one question. Yeah, that's it. Yeah, so Manish, I think there's no more questions. We can have people talk to us offline. So I'll request Mr. Mahajani to give a vote of thanks, and I would like to thank Mr. Arjuna Menon for joining us on the panel and addressing, and we'll be definitely happy to have him very soon.
So thank you, ladies and gentlemen, for joining us today evening. And we also thank our esteemed panelist Arjuna Menon, who at the last moment he accepted our request and he joined us from Frankfurt. So we'll catch up soon. We will keep you posted about new programs which are coming up probably next week. Thank you so much.
Thank you, and do follow us on LinkedIn and Twitter. It will help us stay connected. Thank you.
Thank you. Thank you.
Thank you.
Thanks. Bye-bye.
Bye.